Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And I do want to apologize, but even before we get started, for running a little bit late today. We went to the gym this morning, got to the office, dropped off our son at preschool, and then I looked in the trunk and thought, whoa, I'm done messed up. My camera bag was left at home. If you guys don't know, I've got this really cool bag. I'll post a picture of it on Twitter later if you want to go and follow us. It's got a camera in it. It's got a spare Shure SM7B, it's extra microphone. It's got my laptop. It's got a bunch of cables in it. It's got a ton of equipment. I can set up a coffee and crypto studio anywhere on planet Earth so long as I have a place that I can sit down and apply. I mean, I suppose I can stand up and just hold my laptop, and just fiddle around like that, and an internet connection. So I've got that bag and I can't take it with me everywhere, and I left it at the house. So I had to run back to the house and grab it real quick. But we are here. Do want to sincerely apologize for running late. I'm trying to take timeliness a whole lot more seriously. As you guys know, I was struggling there with being on time for a while, and that is just a full open and honest admission, and it is something that I want to do better on. Now, we're going to talk about CPI because there is a hugely important release that just happened today. And I am excited to tell you that it is extremely bullish. And I'm also excited to tell you that I was wrong. We've got an admission of timeliness that needs to be worked on. We've got an admission of me being wrong all in the first 2 minutes of the stream. Man, hopefully I'm setting a good example for you guys. I was under the assumption that we were going to see a pretty large nothing burger coming out of the consumer price index today. And instead of that, we've actually seen a major drop on CPI. In fact, this is one of the largest drops that CPI has seen to date. And today we're going to analyze why that drop was so large, whether or not that's sustainable. And we're going to talk about what CPI and the effective federal funds rate are going to look like moving into the next CPI data release, which will be next month, and the effective federal funds rate decision, which will be coming out tomorrow, which also is likely at this point to be an exceptionally bullish event. We have had a lot of fear in the market. We've had quite a lot of concern that the market was not going to be able to sustain itself above these critical support levels that it's above right now because we were concerned about the CPI data being bearish. I'm excited to tell you that it is very, very, very good news. Let's read some chat. Sean O'Brien was in chat first, said, oi, oi. Shout out to you, Sean O'Brien. RC Moore is in chat, said, hello, good morning. Mike Lowry said, good morning. Philly Skills, Mario De Leon is in chat. IT Shoney, I'm my hero, Cosmin B, Wisely T. We've got some rhymes. The market can stay irrational longer than you can stay solvent. Stay patient and don't over leverage. Absolutely. Leverage is not inherently a bad thing, but just like all forms of debt, you want to make sure that you are using it wisely and not being a slave to it, because plenty of people are slaves to the debt that they take on. Leverage is a form of debt. I don't think it's a bad thing, but you do need to be very careful with it. Fun fact, if you're watching YouTube Shorts and the notification pops up that you can't comment until you close and leave the short section, look, I wouldn't want to be first. Oh, I see. All right. Good morning to all of you guys. Before we get started, I just want to remind you guys what the vision of this channel is, guys. We want to help you become and live financially sovereign. You see, I believe one core thing. I believe a lot of things, of course. I'm pretty opinionated. If you've watched the channel for a while, you probably know that by now. But there's one thing that I believe that I think is just completely different than what anybody else in crypto or in finance is teaching you. And that is that financial bondage, which many of you guys have been in or may be in right now, and I'm sure you just know intrinsically what I mean by that phrase. Financial bondage is not a financial problem. Financial bondage is an education and a spiritual problem. And you know the way I know that? Because in my career, I've given away hundreds of thousands of dollars to people just trying to help them and benefit them. And I've watched them and I've watched myself when I've been given money graciously by the Lord. When I've earned money, I've been given this blessing. It goes, right through my hands because I did not have the education and I did not have the spiritual character to hold those blessings. And so I believe that for you to become financially sovereign, that is having control over your finances, that they would serve you and you shall not serve them, and that they would benefit you, pushing towards the purpose that God has called you to in your life, or whatever it is that you've purposed your life around, your destiny, your fate, whatever you want to call it. Your finances should be supporting you in that. And if they're controlling you, they're not in the right place. The way that you get to that place of financial sovereignty is through education and through a spiritual redevelopment in this guy, in me, in you. Whoever I'm talking to, you right now, you're watching, you, me. I'm preaching at myself just as much as I'm sharing with you guys. We've got to get our character right. And yes, we do need to be educated on how to budget. We need to be educated on technical analysis. We need to be educated on markets. That's all true. But most importantly, we need to be educated on how to have the right character to hold those things. What am I talking about? I'm talking about timeliness. I'm talking about discipline. I'm talking about self-control. I'm talking about integrity. I'm talking about honesty. I'm talking about all of the characteristics that somebody who is able to be worth $1 billion and still be a decent guy or decent woman has, because money will ruin you if you don't know how to use it. And so when I say I've given away money, I don't say that in any way to brag. I say that to say that what I should have done is I should have helped those people through education, and sure, maybe giving them some money or helping them in some way, but also through teaching them the principles of financial sovereignty. And through the last 5 years, I've been learning, wow, wait a minute, financial bondage is not a financial problem. It's an education, a spiritual one. And that's what we want to share with you today. All right, jumping on over to the CPI. As you guys can see, CPI has come down dramatically. It's sitting at 4%. We had predicted that we weren't going to see this large of a drop, and we have seen a very large drop, and I'm going to tell you why today. But first and foremost, we have seen a 0.9% drop on CPI on headline inflation. As far as core inflation is concerned, we've seen a 0.2% drop over there as well. So this is not just an energy and a food thing. This is also over in major categories as well. So what does this mean? Well, if you remember, CPI is the Consumer Price Index. It's put out monthly by the Bureau of Labor Statistics. That's a United States government agency that is tasked with collecting statistics about the economy. And this is one of their most important numbers. Other numbers that you may be familiar with are like GDP, the employment rate, etc. The non-farm payrolls, for example, is another one that you may have heard of. CPI is perhaps the most important because it tracks the inflation of the United States dollar, and it is the metric that the Federal Reserve tracks whenever they are hiking rates. We'll get to rate hikes in a minute. Inflation of the U.S. dollar has been a huge concern to Wall Street as well as Main Street over the last 2 years, ever since the pandemic. During the pandemic, the Federal Reserve put $5 trillion into the economy through quantitative easing. Much of that money was given out through the Paycheck Protection Program. Much of it was given out through the stimulus checks, etc. So much money was put into the economy that it led to massive amounts of inflation. And then about a year and a half ago, when the Russians invaded Ukraine on February 24th, that led to disruptions of the global supply chain the world over, which led to even more inflation and exacerbated the problem that was already occurring. And so the world had to move from a just-in-time manufacturing model to a just-in-case manufacturing model, where many corporations, manufacturers around the world switched from prioritizing efficiency to prioritizing safety. And when you prioritize something other than efficiency, naturally efficiency goes down. So these companies are not able to produce products quite as cheaply as they were before, because now they're working on protecting themselves from some kind of extra invasion or some kind of further supply chain hiccup or crisis, such as the difficulty of getting wheat or soybean oil or flour or sunflower oil or pig iron or steel or coal or oil or natural gas out of Russia and Ukraine. They've had to move in this direction of, we need to be a lot more safe this decade, where we were a lot more free to do free trade and invest in efficiency the last decade. Now we got to be more safe. That leads to inefficiency in the global supply chain, and that leads to inflationary economics back home here in the United States and around the world. We're the most insulated, but around the world, of course, even more so. So with inflation coming down by 0.9%, what does that mean for Bitcoin? That is exceptionally bullish for Bitcoin. And as you can see, Bitcoin has performed kind of well? Question mark? You see, the problem is this news came out at 8:30 this morning, and Bitcoin dropped. Interesting, right? Bitcoin actually dropped when this news came out. This news is exceptionally bullish for Bitcoin in the fact that the effective federal funds rate will likely plateau tomorrow. But we've kind of got to unpack this whole dynamic between the effective federal funds rate and between CPI. Make no mistake, I think that CPI dropping by 0.9% will ultimately be a bullish thing for Bitcoin. But here's the problem. Bitcoin is characterized as this savior for anyone who is trying to avoid inflation. The problem that you run into when inflation goes down is that part of Bitcoin's use case, part of the argument for trading and investing in Bitcoin kind of starts to go away. Many people like the idea of Bitcoin because it is an inflationary hedge. Well, if inflation isn't that bad, then the problem that Bitcoin's trying to solve gets a lot smaller. For example, if you've got Facebook and Facebook all of a sudden decides, you know what, we're just not, and the market just realize, everybody just decides to stop using social media, that problem goes away. People wanting to be connected on the internet, then Facebook, Twitter, Instagram, YouTube, all of the major social media platforms, they shrink. They get smaller because the problem that they were built to solve start to go away. For example, if there's no war, then a military manufacturer loses part of the problem that they were put into place to solve. So as inflation goes down, that makes it more difficult for Bitcoin to seem as appealing, because with inflation not as high, then people think, oh, maybe I'll just leave my money in the United States dollar. If it's only at 4%, I think I can stomach 4%, 5%, and we're worried it won't go back below 4% for quite some time, then maybe people would be more inclined to get into Bitcoin. So as we've seen inflation come down more aggressively over the last couple of months, not so much more aggressively, but as we've seen it come down more over the last couple of months, of course, these are all the dates of the CPI releases. We've got January 12th, February 14th, March 14th, April 12th, May 10th. These are all CPI data releases. We saw between 0.1 and 0.6% CPI drops on all of these release dates. The Bitcoin market originally was going through major rallies as a result of this, because inflation was so high that people wanted to get into Bitcoin. And when it came down, people saw that as the economy is getting stronger because the inflation is coming down, but the inflation is still high enough that I want to hedge my bets against the US dollar and put money in Bitcoin. So that golden zone between 5 and 9% on inflation actually, in a way, benefited Bitcoin. Now that we're coming back down towards target 2%, I think it's going to take us years to get there. But since we're moving in that direction, more people are starting to think, maybe this isn't as bad as I would think. Now, let's talk about what implication this has on the Fed tomorrow, and then we'll loop back around and talk a little bit about why the CPI dropped this aggressively. So many people, including myself, originally, and for the last month or so, were predicting that we were going to have a Fed rate hike again on the effective federal funds rate. If you don't know, we made a video about that about a month ago. The current effective federal funds rate sits at 5.15%. If you're not familiar with the effective federal funds rate, that is the rate that is used in overnight banking transfers, and it is essentially the base rate that all other interest rates are based on. If you want to borrow money, you're going to base it on that rate. A lot of times, United States Treasuries, one of the time frames, either the 30-year or the 6-month, whatever, will be right around the effective federal funds rate. If you look at U.S. Treasury returns, I was actually looking at them last night because they are very, very, very high right now on very short-term time frames. I'm thinking about getting some treasuries. The 6-month treasuries, I believe right now are paying, here we go, Bloomberg's got it. 6-month treasuries right now, for example, are paying 5.33%. A lot of times, one of the treasuries will be sitting right around where the effective federal funds rate is, and the highest treasury will be sitting right around that level. And that's kind of what we're seeing right now. The effective federal funds rate is at 5.15. The highest treasury return is the 6-month right now. That's sitting at 5.33. So the question that many people had on their mind was, are we going to see another effective federal funds rate hike? I believed that we would, because I believe that the CPI was not going to be this large of a drop. I'm going to show you why I'm a little skeptical of this drop here in a minute. We're going to kind of put on our tinfoil hat. No, I'm just kidding. We're going to look at why this drop might not be everything you think it is. But in the short term, the Fed goes off of the CPI data when they are making their decision about whether or not to hike rates. And since CPI has indeed come down, we've seen a major drop on CPI. By the way, this is not a small drop. This is the largest drop on CPI that we have seen in years. This whole drop from 9.5%, where we were about a year ago, June of last year, we were at 9.5. We have not dropped, to my remembrance anyway. You guys can correct me if I'm wrong, but to my remembrance, we have not dropped 0.9% in 1 month ever. This is a huge drop. So I'm going to have to pivot on what I tell you about the effective federal funds rate. This all but guarantees that Jerome Powell's Fed will be pausing rates tomorrow. And that's where the real good news starts to kick in. We're going to also talk about how this affects the real estate market here in a little while. So stay tuned for that. That's where the real news kicks in. And I think that's actually why Bitcoin has not managed to go through a massive rally just yet, because everybody knows that with the CPI coming down this much, we are likely to have the effective federal funds rate drop. But I think people are sitting here waiting to see, will that occur? Will the effective federal funds rate pause? And if so, how is everybody else going to respond to it? This is a new market. The effective federal funds rate has never been paused before in the history of Bitcoin where it had as much attention on it as it did right now. The last time the EFFR was paused was in 2018. By the way, if you look at 2018, I can show you the effective federal funds rate right here. The last time it paused was here I'm sorry, not 2018. I meant to say 2019 during the accumulation phase. In mid-2019 was the last time it paused. If we look at Bitcoin, during that same time, May of 2019, the market was actually going through the peak. The pause came in, and Bitcoin went through a major rally. However, people weren't really watching the effective federal funds rate much back then because it just didn't matter as much as it does right now. The effective federal funds rate right now is one of the most important metrics in our entire economy. So if we do see a Fed rate pause, there is not much precedent, but there's quite a lot of expectation that will send Bitcoin, and excuse me, I think I was on my face that whole time. Let me show you. The effective federal funds rate pause took place here between right here in December of 18, moving through January and June of 2019 before it started dropping. Looking on Bitcoin, you can see that during that time, Bitcoin, as it was starting to pause, started going through a major rally. And but what I'm saying is that wasn't as important back then as it is now because there wasn't as much attention on the effective federal funds rate, and 2.25 or 2.5% EFFR was not as important, and we were also in the good times. The good times were rolling. It was good times back then. It was much easier. So now people are wondering, how is the market going to respond to a Fed rate pause? We saw a Fed rate pause before, and it ended up being a pretty good thing for Bitcoin. Are we going to see the same thing occur this time? I think that we will, but I think the majority of the market right now is kind of looking back and forth like, what are you going to do when the Fed rate what are you going to do when the Fed rate pauses? Everybody's like, how are you going to react? I don't know. There's a lot of uncertainty. So when you have uncertainty, that's part of FUD, fear, uncertainty, and doubt. I don't know if people are necessarily doubting that it's going to be a pause. I don't know if people are necessarily fearful that everybody else is going to sell a Fed rate pause. I think there is quite a lot of uncertainty because this is uncharted waters. These are uncharted waters. This is uncharted territory. And so I believe the investors in the cryptocurrency space right now are wondering, what's a Fed rate pause going to do to us? Could, for some reason that I can't comprehend, is it going to drop Bitcoin? I don't know. We shall see. I think that the market will rally as a result of that, but people cannot and will not forget that there is an open lawsuit against Changpeng Zhao, Binance, and Coinbase. War was declared on the cryptocurrency market. And so that's the area where we really have to question, is Bitcoin prepared to go on a rally as a result of a Fed rate pause? And we also need to analyze and we also need to come to an understanding that the Fed pausing rates and not doing a rate hike could be temporary. It's possible that the Fed will hike them again at the next meeting if what I'm about to talk about comes true. So let's go ahead and segue into that. You see, one of the things I want to bring to your attention is part of the reason why we have seen the drop that we have thus far. Let's go ahead and talk about that. You see, one of the concerns that we have with this drop on inflation is as follows. Let's go ahead and jump back on over to the 12-month price change. You can see one of the major reasons that we've seen a drop down to 4.0 on CPI is because energy is hugely negative. Energy is the reason that we're at 4.0 because food is at 6.7. It was a drop, but it's still much higher. Core inflation is at 5.3. The concern that I have for this month very well may be getting kicked down the road until next month, and I'll show you why. If you look at energy, go to our table. Energy is broken up into energy commodities and energy services. Energy services are mostly neutral, give or take. Electricity's up, natural gas piped is down. The major reason why energy is down 11.7% is because energy commodities are down. Fuel, oil, and gasoline of all types are down immensely. And I can prove that on this chart. Over at Statista, we've got average fuel oil prices for gasoline over the last couple of years. When did they peak? If you'll remember, it was exactly 1 year ago that gasoline prices peaked out at $5 a gallon nationally on 87. And so when we're looking at the current data, what we're looking at, we're looking at a year-over-year amount of data. In fact, if we come here to, let me just pull this up, bls.gov/CPI. Let's just go back a little bit. You can see that we're looking at May over May statistics. So we're looking at that statistic. Just keep in mind, we have one more month to go where we're going to see very negative fuel oil. But here's the problem. When you're doing month over month, we're looking at May to May. May to May's data. If you take $4.55 a gallon down to $3.67 a gallon, then yes, you've dropped about 20%, which is what the data reads. Next month, it's going to be probably even more dramatic because June over June is going to go from $5 down to about $3.60 to $3.70. The problem is moving into July, August, September, which will be reported in August, September, and October, those major drops on fuel oil are going to start coming down. And we're going to run into a problem over the next several months where energy is going to level out. You can see it's already level here on energy services. Natural gas piped is going through a similar phase. I don't have the chart for that up right now, but natural gas is doing something similar. It was more expensive a year ago. Why? Well, quite simply, June was about 4 months after February, which February 24th, that's when I almost said the Soviet Union. We're in 1980s. Russia was embargoed on oil and gas, and the supply globally kind of dried up, and the economy had to renegotiate itself on how to get that oil and gas. The problem is, here in about 3-4 months, energy is going to be positive. It is going to return to inflationary states. And if energy is sitting at 1%, and if major categories is still sitting at 6.7%, if food is sitting at 6.7%, and major core inflation is sitting at 5.3%, and energy goes neutral, then major categories, all items, major categories over here is going to go up to like 4.2 or 4.3%. So I think you get my point. Hopefully you understand what I'm saying. If energy goes back to baseline, which it inevitably will, in fact, I can pretty much tell you when it'll happen. We're sitting at $3.66 right now. Gasoline by October CPI data release is going to be neutral, more or less, because gasoline prices are creeping up from $3.30. They're likely to keep creeping up towards $3.30 up to $4 just because inflation naturally occurs. That's kind of just the way it works. If you look back at the energy category, if you have gasoline sitting at 0% and fuel oil sitting at negative 10 or 0%, and energy is at negative 1% or so, it's going to be very difficult to get all items to go below 4%. We're starting to get, over the next 2 to 3, 4 months, into that sticking zone that I was telling you about, where inflation is going to get really sticky. A lot of that has to do with the fact that we're letting some of that data trail off. Right now, of course, we have the data for May over May. It's June, but June's not done, so we don't have June over June because we don't have all of June yet. Once we have all of June, the next decision, which will be, July 12th, I think? Yeah, July 12th. On July 12th, when we get the June over June data, it's probably going to be even more dramatic. Energy will be even further down. You might see another CPI drop. However, that's not going to continue because then the drops on the inflation of gasoline is going to start coming down, and that could make it much more difficult for us to go below 4%. We're starting to get into that sticking zone. We might go down to 3.5%, but getting down to target 2 is going to be difficult. And so that's where, if inflation doesn't start coming under control, the Fed very well may have to hike rates again. Maybe not have to, but again, as I said on office hours last night, DeLeon was there. He's in chat right now. The Fed has a hammer called the effective federal funds rate, and when all you've got is a hammer, everything looks like a nail. So if inflation does want to get sticky around the high 3s, the Fed may very well hike rates again. Hopefully not, but it very well may happen. So we need to keep that in mind. And Jerome Powell and the Fed realizes this. They know this data because they've been looking at it way, way, way too closely for the last month. And they also, of course, are talking to the Bureau of Labor Statistics and knew that this data was going to come out several days ago. So this is data that they are going to be using in their decision tomorrow. A Fed rate pause now is likely, but we're not out of the woods just yet. That's kind of that's everything I'm trying to tell you in a nutshell. The Fed rate pause is now highly likely tomorrow, but we are not out of the woods yet. So, how has this impacted Bitcoin? How will this impact Bitcoin? As you can see, Bitcoin is currently trading at $26,000. The drop on Bitcoin over the last 2 hours is unfortunately a little bit unsurprising. Many people were hoping that CPI data dropping would be one of the catalysts for Bitcoin, but unfortunately, if you throw a match on a wet pile of wood, the thing's not gonna light. You can light a match in a lighter all you want, but if it's doused in water, It's not gonna light. It's just not gonna happen. You've got to have a fireplace. You've got to have a fire pit, a spot for your fire, whatever it is. That one little burnt out area in your yard, if you lived in the country like I did growing up, the area where you build fires, you've got to have it ready. You've got to either have some kindling down there, or if you're like me and you're a good old boy from the South and you just dump gasoline on it and then you throw a match on it. That's how you start a fire where I come from. Anyway, you've got to have the fire ready to get lit, right? And so the rest of the cryptocurrency market right now is looking and they're saying, whoa, CPI just threw a match on there and it did nothing. What do you mean? It always works. Why is it not on fire? Somebody forgot to pour gasoline on it. You know who it is? Gary Gensler went over there and put a twig in the top of the thing and made it so no gas could. I know I'm getting into weird analogies. Welcome to my world. Gary Gensler's attack on Binance and Coinbase and Changpeng Zhao has really poured a lot of water on our fire, poured a lot of anti-fire foam on our fire. And so when we have bullish news like CPI data coming out, or when we have bullish news tomorrow like the effective federal funds rate being a pause, it's a little bit like trying to light a fire underwater. And I don't know about you. I'm not SpongeBob. I can't do that. Maybe you can. I never understood how they had a grill and a fireplace down there. But the point is, it's like the fireplace is underwater. Good luck lighting that. Good luck getting that to light because there's FUD. It's very difficult for bullish news to come in and kick off a rally when there's so much FUD in the space, because one of the principles of technical analysis, one of the principles of markets that you need to know is that whenever there's bullish news, whenever you're in a bull market and the market sentiment is extremely bullish, bullish news will just add to that fire. It's a little bit like throwing gasoline on a fire, right? Whenever you're in a and if you throw bearish news on there, it won't really do a whole lot. You know, if you have a giant fire and you take a little cup of water and you chuck it on there, it's not going to do anything. It's going to evaporate instantly. If you're in a bear market and if you have a very bearish trend, very bearish sentiment, and you throw some gasoline on there, you throw a match on there, it's not going to do anything because the fire's not lit. You throw some water on there, it's just going to make it even more wet, right? It's just going to make it even harder to light the fire. It's kind of where we are right now. The sentiment has shifted so much in the bearish direction that the bulls are having difficulty getting anything going, even with very bullish news that would typically lead the market into a major rally, like a 0.9% drop. Now, of course, there's that whole dynamic of inflation coming down is not necessarily good for the how would you say, the advertising of Bitcoin, because of course Bitcoin is designed to be an inflationary hedge. But at the same time, I think right now we've got so much bearish sentiment right now that's overriding this bullish news. I think, oh my gosh, is crypto going to survive this regulatory attack by Gary Gensler? A little bit overshadowing, hey, good, we had a good CPI release. I'm hoping the Fed rate pause tomorrow will be even more bullish, and I do believe it will, but time's going to tell on that. Now, let's take a look at the chart. Just want to give you a bit of an update. Guys, if you have not already, you definitely ought to go and get Lux Algo. It has done a wonderful, wonderful job predicting this market. In fact, if you go back to the last sell signal, because I'm not really counting this buy signal was just, I would have weeded it out the day after that it came in. It was technically confirmed. There were a lot of other reasons why we wouldn't have gone for this buy signal. If you go back to this sell signal that began this downtrend, you can see that, first of all, it called the whole downtrend. Everything after this sell signal has been under the gaze of this downtrend. It ended up predicting it very well. And then Lux Algo also gave us a take profit zone between $23,000 and $25,800. If we zoom the chart forward and just remember that level of $28,400, you're going to see that there's different zones now because this buy signal came in and kind of threw things off. But the original sell zone started at $28,000, and that is exactly where Bitcoin dipped into. That is exactly where Bitcoin reversed at. If you guys have not gotten Lux Algo already, it called this entire downtrend, and by the way, it called all the uptrends that came before it also. This uptrend, it was called. This uptrend, it called. This uptrend, it called, and it was right. On top of that, if you look out on the weekly chart, Lux Algo has given us a buy signal on the weekly chart that we're very excited about. And in fact, the take profit, the middle zone of the take profit, was sitting at $31,000. That's exactly where Bitcoin went. And now Bitcoin's coming back down and back testing the trend catcher. And Lux Algo is such a widely adopted technical indicator by tens of thousands of investors in the cryptocurrency market that this trend catcher is actually providing us support. I think there's a lot of people that use Lux Algo that are saying, okay, this zone right here around 25.8, it's a pretty critical support zone. On top of that, the trend catcher jumping up to 25.8 is not surprising because 25.236 is very important, and there's several other levels right here that converge, such as the 200 weekly exponential moving average sitting just below the trend catcher, right at 25.3. And if you look back on the daily chart, that same moving average that we've been paying so close attention to, that of course being the 200 daily exponential moving average, is also sitting right there around 25.3. So out on the weekly chart, you've got trend catcher alignment with the 200 daily EMA and the 200 weekly EMA. By the way, in case you have not seen our video where we broke down Lux Algo in a bull market, I would highly encourage you to go back and watch that. I will show you really quickly. Let me just pull it up so you can see the thumbnail. We made this video a while ago, right here. A perfect indicator calls a $70,000 Bitcoin. This video is still relevant. It was made 2 months ago. It is still 110% relevant. Has not changed at all. That video, I predicted that Bitcoin could hit all the way up to $70,000, and that's what Lux Algo was calling, because Bitcoin has always had a Lux Algo buy signal flash right before a bull market. According to Lux Algo, we're in a bull market as of several months ago, and now we're just trying to shake things out and see where we go next. The good news here is, guys, is that Bitcoin is in great shape, and I do believe Bitcoin is going to do very well over the course of the next year. That being said, this CPI data really came in clutch, because if we did not see this CPI data coming in at 0.9%, there's a very high likelihood that we would end up seeing Bitcoin drop below 25,236 and moving on down towards the bottom half of the $20,000 region. At this point, Bitcoin is still going to need to prove itself, but it is, at least for the short term, starting to get out of the woods. All right, let's go ahead and read some chat. Really appreciate all of you guys tuning in, and I very much appreciate Rick4962 donating $50 again. Said, God is our shelter. Proverbs. Absolutely right. Thank you so very much. Thank you so very much. If you throw some water on top of water, it's just water. Yes, you're not going to get anything started. All right. Let's see. Justin Eubank said, good morning, Crypto Jeb. Good morning to you as well. Good morning to Prophet Bear. By the way, guys, what I like to do over the course of the back half of the stream here, over the last few minutes, I like to answer some questions. I like to interact with you guys. So if there's anything you'd like to get that you'd like to bring to my attention, now's the time. Go ahead and say anything that you would like. Let's see. High probability 31K was year high, and we whipsaw chop sideways for the rest of the year. Would not be surprised. I could see us attempting to break through it again, but I would not be at all surprised. All right. Let's see. Queen's in chat said Bedrock present. The classic IT guys in chat. Colin McDonald in chat said, hi, Jeb, Mike, Queen, and all. Good to see you guys. It's very disheartening when U.S. stock market is rallying every week and Bitcoin is in a downtrend. Hopefully Bitcoin is coiling up for a big movement. I think it is. I think it is. But I would encourage you guys not to ignore the stock market. I think it is an absolute total mistake to ignore the United States stock market and be all in on Bitcoin. We should invest in cryptocurrency. And if I were talking to people that are in the stock market, I'd tell them, hey, I think you're missing out by not investing in cryptocurrency. But I think there is value in investing in U.S. stocks. And by the way, the stock market just broke some of the most important resistance that it has seen in a very long time. $430 was a hugely important resistance level. We broke 418. Now we're breaking 430. Moving to the upside. In fact, we just hit the take profit level on Lux Algo over here on the daily chart. And also, over here, we're very close to the take profit on the weekly chart. U.S. stocks are doing very well right now, and they've actually managed to hold above the 200 weekly exponential moving average, which is typically the level that if you're going to go into just a massive recession, that's where you're going to drop below. That's what we saw happen in 2001. That's what we saw happen in 2008. So far, that has been staved off, and we've managed to hold here above the 200 weekly exponential moving average. I'm pretty encouraged about the state of the United States stock market right now, and that's definitely not something that we should be upset about. We should be very happy about that. As far as I do understand what you're saying, that seeing a rally in the stock market is disheartening when you're seeing Bitcoin move down every day. I would encourage you, don't just be invested in Bitcoin. I think it's a mistake to be 100% in on crypto. I think you should have some diversification. We're looking to get into real estate soon. Stock market, it's important to be diversified. There's a saying by Andrew Carnegie that said, put all your eggs in one basket, but just make sure it's a dang good basket, right? There is an element of truth to that. He was the guy that revolutionized American industry, brought the steel industry roaring to life. He put all his eggs in one basket in that regard. But what he didn't do is he didn't put all his eggs in one factory. He didn't put all his eggs in one steel manufacturing process. He put them all in one category. Steel. Very broad category. A broad category is not necessarily as narrow as cryptocurrency. The broad category is investment. There's plenty of things that make good investments besides just crypto. That's not to say that crypto and Bitcoin are not good investments. They are. I love Bitcoin. I love crypto. But I think it is a mistake to only be in on crypto, or else you'll find yourself in exactly the position you're looking at right now. Oh, man, it's just heartening to see the stock market going up and Bitcoin going down. I hope Bitcoin's cooling up for a good big movement. I think it is. But why not have some money in the stock market and take advantage of both movements, right? Why not have a little bit lower risk, a little bit lower return over in the stock market as a little bit of a base, and have cryptocurrency as well, and then bridge that gap? Because ultimately, if we've got this idea that we're going to overthrow U.S. stocks and we're going to overthrow the stock market and the stock market's going to disappear, it's all going to be crypto, that's not going to happen. That's not real. That's not reality. What is reality is that cryptocurrency presents a technological manifestation of a core value, which is financial sovereignty. The stock market, traditional finance, needs a healthy dose of that because there's not as much financial sovereignty over there as there is in crypto. Hear me here. The reason that we invest in crypto is, yes, to make a huge change in our life and our financial picture, but the reason that we invest specifically in crypto while doing that is because we believe that cryptocurrency was founded on financial sovereignty. The U.S. stock market was not. Not knocking the stock market. I'm just saying that the core values that crypto has, independently verifiable ownership, independent accountability, decentralized identification, all of these different concepts in cryptocurrency that are unique to cryptocurrency need to come in and augment the way that our world operates. The world needs to operate in different ways, in a lot of different ways, but we're not just going to be able to overthrow $100 trillion system. What we can do is we can be massive disruptors. Steve Jobs didn't come in and say, everybody forget it. We're not going to have phones anymore. Nobody's going to talk on a phone ever again. Phones are stupid. We're going to build a brain chip and you're going to telecommunicate with everybody through the brain chip. Now that happens sometimes when you go from horses to cars, or when you go from the telegraph to the telephone, or when you go from, a donkey to a plane. I understand there are times where there's a fundamental paradigm shift, and some of that's going to happen in crypto. But in a lot of ways, this is going to be from flip phones to the iPhone, right? This is Web 3. This is not something new. This is a development and a reiteration of traditional finance and traditional software development. And it's very important, and in no way do I mean to undervalue that, but we do need to understand that we need to be able to operate with the rest of the world, because if we just say, up yours, and we just forget the rest of the world, they're not going to want to do business with us. And there is a very important point to make there, that to do business with somebody, they can't hate you. If 99% of the world hates you, you're never going to build a business that serves those 99% if they hate you. So we don't want to just go in and crash and burn and be like a bull through a china shop. We do want to understand that there's a degree of breaking down that needs to happen. The banks need to operate differently. There needs to be more accountability. There's all kinds of things that need to change. But tearing it down and rebuilding it from scratch would leave all of us in a much worse position than we already are. All right. Good deal. Rick4962 said, one day if you cash your crypto in, how do you think it will be when it's the digital dollar instead of paper? I don't know if it's going to change much, because I don't know if it's going to change a whole lot. And the reason I say that is because crypto and sovereign currencies are always going to be very different categories if you look into them correctly. People might be confused about them, but they're definitely going to be very different things. Prove your allegiance. Sing "I'm a Little Teapot." Why would I sing "I'm a Little Teapot"? I'm not. What? What crypto to buy today? Always, always, always Bitcoin is a good idea to start with. If you're asking that question, just go back to Bitcoin. Just get more Bitcoin. Just stack Bitcoin. It's the best cryptocurrency out there. Can you do some quick TA on NASDAQ? I'm not sure. I think maybe we could look at it a little bit. All right, let's look over here at the NASDAQ 100. NASDAQ is rallying a lot, and this is kind of what I'm talking about. NASDAQ over here recently broke through 13,700, and right now it is also attempting to break through 14,851. This is the US 100 over on Skilling. These are a couple of different levels that are pretty important because this 13.7 level was the local high that we set here in well, is all-time high that we set here in 2021, and then also here that we set in August of 2022. The other thing to keep in mind is that NASDAQ's actually not very far from all-time high. It's only 11% away. We've hit the price target. At this point, stocks are going parabolic because I think many people are expecting an effective federal funds rate pause, and by the time the EFFR starts coming down, which will likely be 6 to 8 months from now, so we're looking at Q1 of next year, when that occurs, stocks will likely be jumping straight through the roof. So if you're looking to get into the stock market, now's not a bad time. If you got capital on the sidelines, this is not a bad time to look to getting into U.S. stocks. It might be a bad time to get into the real estate market because with inflation, with the FFR coming down, that could incentivize more people because they can get lower rates to sell their house and to move. That have been wanting to move for the last 3 years but couldn't move because they were locked in with their low interest rate. That being said, there's a lot of value to be made there. All right. Really appreciate all of you guys for tuning in. We are going to go ahead and wrap it out. Thank you guys so very much for always being a part of what we're doing here. I am so excited for the next steps here on the channel. I'm so excited for what we're doing behind the scenes. There's a lot of stuff that I'm working on behind the scenes. I know I'm always saying that. I'm pumped. I'm so pumped about the things that we're doing. And I'm so pumped to be able to share a lot of it with you in the future. And I'm just really excited about this message of financial sovereignty. I want you guys to find that financial sovereignty that you're looking for. And if you don't know what financial sovereignty is, ultimately, I want you to have control of your finances, not have them over you. Because many people live in financial bondage. Many people live in slavery to their money. And instead of being able to pursue their purpose in life, whether that purpose in life is to create beautiful art, like your painting on the roof of the Sistine Chapel, or you're painting a artwork that's going to be revolutionary, or you're designing jeans for Lululemon, or if you're whatever it is that you're purposed and called to do, money should not be standing in your way of that. If it is, you have a problem of financial bondage. Financial bondage is when you have a purpose and you can't fulfill it because money is an obstacle. I want to help you not have that be an obstacle because I want you to be financially sovereign and have sovereignty over your money, have control over your money, that you would not have to serve it instead of the purpose that you were put on earth to pursue, but that your finances would be a helpmate, that they would be a helper, that you would never serve them, that you would not build your life around, I want to be a billionaire. That's a kind of a crappy purpose. You know why? Because money will not fill that hole in your heart. You've been given a purpose. You've been made in the image of God. You've been given a destiny, a calling, and walking in that. If you're a believer, obviously following the Lord Jesus Christ is the ultimate purpose. But there are other purposes we're given. That's where you're going to find that fulfillment. Being a husband, being a parent, a good husband and parent is a purpose in my life. Teaching you guys about financial sovereignty is a purpose in my life. Fulfilling and walking in that purpose should not be blocked and hindered by your money. Else you find yourself in financial bondage, and that is no place that you want to live. By the way, you can be in financial bondage and be worth $100 billion because there's an education problem and there's a spiritual problem. And I, on this channel and through all the mediums that we post content, want to help you to break those chains of financial bondage and move on towards whatever it is that you've been called to do with your money supporting you along the way rather than being a roadblock after roadblock after roadblock. I hope you've enjoyed today's show. If you did, make sure to hit that like button, subscribe to the channel, and sign up for Lux Algo using coupon code JEB30, JEBB30 for 30% off at checkout. You're going to be so glad you did, and I'll tell you why. Lux Algo is going to give you so much help in calling these markets. Guys, Lux Algo has like an 80 or 90% batting record when it calls a trend, and it gives you a confirmation with Trend Catcher, and you confirm with just a couple of other technical indicators because you never want to do anything in a vacuum. It's almost always going to give you a trade that you're going to make profit off of. It's free money. Like, get Lux Algo, use it, make money. It's a money. It's so helpful in your TA. So make sure that you sign up for Lux Algo. Get the education of how to use it, get the education of how to use TA, and make sure that your spirit's in the right place, that you're disciplined and you've got self-control and you've got work ethic and all that. But it's a very useful tool that's going to help you quite a lot. Really appreciate all of you guys tuning in. Make sure to hit that like button, subscribe to the channel. Before I go, I do just first want to thank each and every single last one of you for watching as always, and I will see you guys in the next video. Peace.